Hey everybody, my name is Colby Ross. I'm with Project Finance. See, we got a bunch of people on the phone here, so we're going to get right into it. Starting off our video series here, we have Justin Davis from Point Predictive. Awesome to have you. I figure we could just start with, kind of who you are, your background, and how you got into this.
Sure. It's great to be here, Colby. I appreciate you reaching out and setting this up because I'd love to talk about fraud. I wore the Fight Fraud shirt. So like you said, I'm currently with Point Predictive as a fraud consultant. But prior to that, my time in the fraud industry has been almost 10 years now. I actually started on the phones, taking incoming phone calls for identity theft. And I randomly got that job just from a friend who I had worked with at Target that moved over, and he got me the job. But ironically, I was also in school for forensic accounting. So I was focused more on maybe the white collar fraud and doing more accounting work and sitting behind a desk just counting numbers. But I found a true passion for fraud in the financial institution space. Your credit card fraud, account takeover, deposit fraud, lending fraud. And so I started moving from taking phone calls. I started doing investigations, and then I actually started moving my way into chargebacks and strategy. So did chargebacks for a little bit, but got the opportunity to really focus on developing a strong card fraud strategy program at Alliance Data Systems. Did that for a couple of years, and then actually moved to Boston, Massachusetts, working for Digital Federal Credit Union, and I managed their fraud and BSA programs for 3 years. So I focused on strategy execution, building, team building, and project management. So now I'm moved over to Point Predictive as a fraud consultant focused on the auto and mortgage lending industries and helping identify fraud and streamline those businesses.
So you've been in the fraud space for 10 years. You have to have a juicy story, something you've experienced, over the last decade. Let's hear it.
Thinking through the most interesting, so you can get like big cases. I like to go funny. So when I was first getting started in fraud, I worked with doing chargebacks for credit cards. So a consumer would dispute a transaction on their credit card, and then we would work with the merchant to kind of prove whether that transaction was legitimate or not. Yep. And so we were starting to see some disputes from Ashley Madison, and I don't know if you know what Ashley Madison is or was, but it was a website really focused on cheating.
Yeah.
So we started to work with their team internally to prove whether those transactions were legitimate or not. And we started to notice that there were a couple cards being used. It wasn't just one dispute, but we started to see a pattern with Ashley Madison, and they all started coming from a single hotel in Pennsylvania. So all these cards had a particular hotel that they were being compromised, and it was more of a motel that they were being compromised at. And we saw that the cards were being used for this one profile on Ashley Madison, and they actually sent us every DM and every message that this guy was sending. So we had about 70 pages of messages that this guy was sending, and the messages were awful. Terrible, but it was a lot of fun. I mean, we were just reading through it. We made its rounds around the team. We all got to read through his DMs. But I mean, it's kind of funny, but at the same time, this guy was running a scam through his motel where he was charging by the hour. And so a lot of the times charging by the hour, it's prostitution, right? But there were people that were coming into town and staying at this motel, and he was stealing their card numbers, and he was using those card numbers to pay for his Ashley Madison account. So Interesting, funny, sad.
Yeah.
But that's one that always comes to mind just because it was so much fun to read through those messages.
And I'm sure the institution is, well, so from the institution standpoint, they're seeing this fraudulent activity, but then you've got the relationship back to the person. I can only
Right.
imagine those conversations. Oh, that's fraud. That wasn't my
Exactly.
charge.
Oh, we
Yeah.
saw it all the time. It was like a wife would call because there was they're disputing a transaction, and then we find out it's actually the husband making the purchase, and then like, do we get involved? Do we
Yeah.
say sorry? You might want to have a conversation with your spouse. It gets tough, but those are few and far between.
Yeah. Um, so what's going on now in sort of the fraud space? I have to imagine with COVID and more people banking digitally that there's been an uptick. What are you guys seeing now?
Um, yeah, so it's a great question. I'd say 2020 was the year of fraud. So with the transition to the digital kind of environment, primarily banking, lending, I mean, everything went
Yeah.
digital in 2020, and so did fraud. So huge spikes with the pandemic. There was the PPP, there was the unemployment, there was stimulus checks. So you have this pumping of money into the economy by the government and being done very fast. And usually when you do things quickly like that, you're not really thinking of the risks involved with it or the
Yeah.
controls that are in place. And so fraudsters really took advantage of that. And so as the government was kind of pushing money into the economy, fraud was taking advantage of it. And I mean, to the tune of billions of dollars. So you see this through stimulus checks, through PPP, through unemployment scams. So people getting their their identity stolen. So let's say you receive something in the mail saying you're receiving unemployment benefits. You're like, I never applied for unemployment. Identities are getting stolen, credentials are getting stolen, and then you start to see a lot of things like check fraud with remote deposit. So you can't go into a branch anymore, right? So because you can't go to a branch, ATMs have their limits. You're going to just go through RDC and start taking pictures of checks. And through RDC, it's very difficult to validate something like that. And you're wanting to streamline your processes because people can't go into branches, customers need their money. And so you can't put extreme limitations and restrictions on these deposits because it's just going to make your customers mad. They can't get access to their funds. It's a pandemic. No one knows. I mean, it's pandemonium. No one knows what's happening.
Yeah.
And so there was a ton of fraud last year through remote deposit capture. And
So
then
what are
just
people doing there? Just they're stealing checkbooks and then depositing it into their own account, or
completely fictitious checks. I mean, you
okay.
can just create as long as you know a routing number and a check and an account number, and it doesn't even need to be a true routing number and account number. If the financial institution doesn't have the proper controls in place to actually match those things.
Yep.
So, they can just take you at your word. And that's where, in the credit union space specifically, it's tough because they're not like the big banks. They don't have the capital to afford good controls,
Sure.
good software, good systems that combat these kind of things. They're I wouldn't say outdated because credit unions have been doing a great job of increasing their digital capabilities, but with RDC, you noticed a ton of fraud just because you can create any check, you take a picture of it, it gets deposited, you get, depending on the FI, you get immediate access to a certain chunk.
Yeah.
And then just a couple days later, you get access to the rest. And by the time that you've pulled all that money out, the check bounces and you have no idea what's going on.
So you were just talking about how credit unions have had a difficult time keeping up with fraud, especially in 2020. If you were to start working with a credit union right now, kind of what's the approach that you would take with them?
It's a good question. So, how I typically approach fraud is layered, right? So there's no silver bullet when it comes to fraud prevention, and so a successful fraud strategy within the financial institution arena, whether that be banks or credit unions, would really be a layered approach. And how I approach that would be at the account level. So at new account origination, at the authorization level. So at login for the digital banking, and then at the transaction level. So being able to monitor the behavior in real time. And if you want to look at it like being able to limit fraud as it's moving through the life cycle of that account. So it's starting off with a big flow up front. You're able to stop a certain percentage at account origination. What gets through, you're able to stop at authorization, and then what gets through there, you're able to stop more at the transaction monitoring level. And so what you would have experienced here is just a small fraction here. So from account origination, being able to do a proper identity matching, right? Understanding who are you truly doing business with. In the authorization flow, in your online banking, being able to authenticate who it is logging in. So we know who we're doing business with.
Yep.
But is the person logging in who we're doing business with, or is this a fraudster trying to take over their account? Right. So having proper steps in place at the authorization level to be able to authenticate, yes, this is the right person. And then if they are able to get through that, being able to identify, does the behavior now that they're in session make sense to what they typically do? So you have very good authentication up front with identity. You have great authentication at who is logging in. And then you have behavior monitoring through the transaction flow in real time to say, this person's not clicking right. These transactions don't align with what their typical behavior, right? They don't usually send wires. Why are they sending a $10,000 wire to China, right? They usually don't do this. They don't do this. They don't do this. So maybe send up a red flag, additional authentication. So you're not just trying to stop fraud in one arena. You're making sure that through the entire life cycle of your relationship with that member or that customer, you're having proper stop gaps at each part.
Where do, if I'm a credit union and I've got limited resources and I can spend, $1 on one of those areas, where would you recommend they put it? Would it be up front just to stop?
I'd say up front.
Yeah.
I mean, I'll take that back actually. It's what is your current problem, right? Because you could do a very good job, say credit union, a small credit union. They do a very good job at the identity piece because they're more local. So their field of membership is very local and it's not expansive, right? So some credit unions are across the entire nation, where some credit unions, their field of membership is within a specific zip code. And so they have a very strong relationship with the people they're doing business with. And so they understand who their members are. So maybe they don't want to spend their money there because they already have limited fraud losses at maybe identity theft or synthetic identities or things like that, because they know they've seen the person. So maybe they want to spend more money at their authentication because they're trying to create a digital banking environment. As through COVID, they've realized that, we have to have this or we're going to go extinct. And so as they create that, there becomes issues where, yes, who you're doing business with, but did they give out unintentionally their login credentials and now their account's being taken over? So you'll probably want to focus your money there. So it really depends on what the problem is. And that is where I would suggest focusing your resources. But typically what I say is you would want to do it at the very beginning if you don't have proper authentication or identity checks up front. Because if you're just letting anyone through, you're going to get taken to the cleaners no matter what. But if you're at least stopping fraud up front there, it makes everything else easier.
The fraud that occurs up front, what are these people doing? They're opening an account with a fake identity and then taking out a loan and then just kind of money.
It depends. So it could be identity theft, right? So you have third party using your identity without your permission, right? You have one of the biggest buzzwords in the fraud industry right now is synthetic identities. So it's a third person using manufactured credentials and identity information. The person doesn't exist, but the credit bureau says they do. So they're able to open up this account for someone that just does not exist, right? It doesn't tie back to anything, but they've built up and manufactured the history to make it look real. Or you have people that are just taking advantage of, they're scammed. It's the true person opening the account, but they don't have any real business reason as to why they're opening that account, right? So say a catfishing scam is a great reason. You have your romance scams where you find somebody online, they tell you, hey, I want to send you some money, but I can only send it to you through this credit union or this bank. So you have to open up an account, I'll send it to you, and then just send it right back to me. Because say I'll send you a 5,000, you keep 1,000, send 4 back to me because you want to finance something, right? You're saying, oh, they only do business with this specific bank, or they're an employer and the only way they can pay you is through this specific bank of credit.
They'll open up the account on their behalf. Essentially, they'll have the credentials and it's sort of, free reign after that.
Yeah, exactly. So you opened it up, your free will. You opened it up in your name. You gave out your login credentials and said, you can take over, right? You just use it, and it might not even be a romance scam. They might be complicit. They're just getting kickbacks, right? Say, I'll give you $500 if you just open up the account. I'll give you $500 and you just say it was identity theft, right? And so they're just credit washing, or they're just washing the account off there because they're like, I didn't do it. And very rarely does the credit union or the bank do a ton of digging or investigation with something like that. So they just kick it back and they say, okay, we'll just wash it off. It's $500, whatever.
Yeah. How do you prevent something like that? Are there tools that credit unions can put in place to prevent a scenario like that, or other, new member onboarding situations to look for potential fraudulent activity?
So that's where the scam, it would actually be a little further down in the flow, right? So that would be at the transaction or the authentication, because if you think about an identity check, if you are opening the account out of your free will for yourself, well, how am I going to be able to say that Colby is opening this account and I know he's going to use it in this manner? I don't know that.
Right.
So how I want to identify that suspicious activity is a little further down in the flow to say, yeah, he opened up this account with an IP address in New Hampshire, but now I see someone 6 hours later logging in from Texas. So maybe there's some suspicious activity there, or they just randomly got an RDC deposit for $5,000, right, from an account, a check from Florida for a little league. They do from the YMCA is paying them $5,000 down in Florida. He lives up in New Hampshire, but we're getting a login from Texas. Might want to throw up some red flags there and stop that transaction. So from a scam, it really depends. Is this third party or is this first party? If it's first party fraud, it's a little harder. If it's third party, it's a little easier.
Yeah, that makes sense. So I love that 3-part framework, that sort of layered framework that you said. The second piece of account takeover, what are you seeing for some best practices there?
Yeah, so it's a great question. So authentication typically in the past is, OTP. I'm just going to send you a passcode through your email or through SMS, and that's really not doing the trick anymore. I mean, we've seen it in the headlines as how much money, I don't have the exact number, but how much money is being stolen through account takeover. Account takeover outside of COVID related government fraud was the number one fraud last year. And so account takeover is really taking over the fraud industry. So you can't just assume that sending someone a text message is going to protect them. And so we need to be do a little bit more and do a little bit better at authenticating who it is, whether that be device recognition. You have your biometrics, whether that be a fingerprint or a face scan. What I really find interesting is more of the new types of technology around, say, Bluetooth geofencing. That was always something that I've never seen actually used, but sounds like it would be very cool, and if done properly, could streamline the authentication and just make it super easy to do banking, right? So I have my Apple Watch and my phone tied to my bank account, and as long as they're within the vicinity of each other, I automatically get authenticated and moved in. I don't have to do anything. I don't have to put in a password. I don't have to get a text message. I just automatically get in because I'm within the vicinity of my other Bluetooth device that I have linked to it. So it's like things like that, or pattern recognition, just doing better at step-up authentication rather than just assuming that a text message is going to solve your problems.
Yeah. You have this sort of natural conflict of interest, obviously, between preventing or mitigating fraud and user experience. Putting my digital experience hat on, I'm going to say, well, I don't always have my Apple Watch on me. Maybe I don't have my phone. And to add that friction, we're going to be getting calls because people, want to make a payment and they lost their watch or something like that. So it's obviously a tough balance.
It is.
That's hard to strike.
Can you have a good fallback flow, right? If they don't have that, is there another option before they actually have to call you? Like, calling should be the last option. Remove the need for the call center. Can they self-service? But can they do that securely? That's the issue, right? You want to make it so everyone can self-service as easy as possible, because customer satisfaction equals more customers, right? Or more members. But how do you do that securely?
I like that idea of a fallback flow. So you have, just to use your example, the Bluetooth proximity piece, but if that's not available at the time, there's some other step-up authentication method that the member has to take in order to validate that this transaction is indeed theirs. So for, the 80% of the time where you're in your office doing your banking, it's going to work perfectly. But, kind of that small chance that you don't have one of those things, there is that fallback method. And to add friction in that case, given it's not happening as much, I think is an acceptable trade-off to,
And can you give your members the option? Like, here's 5 different options of authentication. Here's the methods that we recommend and we offer. Pick the ones that you would like. So you say, this is my first option. This is how I would like to be authenticated. If this doesn't work, then this is what I would like to be authenticated. If this doesn't work, then here's my last option. If not, you're going to have to call in, right? And so if you give them the option, I mean, they're in control of their destiny.
It was about a month ago. I'm admittedly a Cash App user, and
I refuse. Everyone tells me, they're like, here's my Cash App. I'm like, yeah, I'm never going to do that.
Yeah.
If anyone listens to this in the banking industry will understand why Cash App will never be used by like an actual fraud professional.
So tell me why.
It's because my thought on Cash App, and I don't know if this should actually be
We can cut this, I guess, if we have to.
My thought on Cash App is the sole reason was created was money laundering. That is my belief, was Cash App was created to launder money under the guise of a legitimate app to send money to your friends. That is my belief. Just seeing how much fraud happens, because money laundering is predicated on fraud, right? In order for money laundering to happen, fraud has to occur first, because fraud is the money being taken from the legitimate person. So fraud happens, then that money has to be cleaned in some way. Cash App is a great way to clean it, because you're just moving it from person to person to person to person quickly.
So do you say the same thing about Venmo then?
I could, yeah. I mean, it's you just don't see Venmo used as much as Cash App.
Sure.
I think it's from just an authentication piece. It's much easier to use Cash App than it is Venmo.
Yeah. Well, maybe we can tag Jack Dorsey when we post the video, and we can get his thoughts. That would be awesome if you could weigh in.
Yeah.
But
that would be a fun conversation.
Yeah, it certainly would. That could be your next
Jack,
video.
your app has been used for money laundering. What do you have to say?
Yeah. Back to what we were just talking about allowing sort of the user to set their own criteria around authentication, and to tie it in with the Cash App piece. So about a month ago, I woke up at 3 a.m, and because my phone was just lighting up, and I saw all these transactions. I'm getting the push notifications from Cash App. About 4 went through, and then finally Cash App stopped it. And I ended up settling with them about a week later, and honestly, the experience wasn't that bad. But one of the things I had thought of was sort of in line with what we were just talking about. I should be able to go into my bank's, digital banking application and sort of set criteria, my own criteria around when and how and where my information is used. I have no intent. I go to bed at 9 o'clock. If somebody's making a transaction at 3 a.m, I guarantee you it's not me.
Yeah.
Just curious your thoughts on that.
I think I love when the consumer has the ability to create their own destiny. Like, the consumer has the controls and the options to decide what is allowed and what is not allowed.
Yeah.
I think being able to leave it up to them, it also shifts some responsibility back to the consumer.
Right.
So it's not just all the onus is on the financial institution. There's some responsibility on the consumer to say, look, this is what, and it makes it easier for the consumer to dispute.
Sure.
Right. So it's like there's responsibility on the consumer's end, but it also increases responsibility on the bank's end, because it's saying, look, you gave me the controls. I set these limits and you didn't follow with these limits. Why? Yeah. Right. So it allows the consumer also to protect their information and their money a lot better than just saying, I'm going to trust that the financial institution and the bank and the credit union know what they're doing and they have my best interest, which they typically do, especially credit unions.
Right.
But it also creates more of a sense of security for myself, and it creates more of a sense of trust, which is what is needed in order to gain that loyalty, right? If you want member loyalty and customer loyalty, there needs to be trust established. And you giving me the ability to control my account down to like those details just creates that trust and increases that trust. So it makes that relationship even better. Yeah. And it makes that loyalty longer.
Yeah, definitely. I feel like there's an ability to set some guardrails on the card side, through Visa, MasterCard, OnDot, services like that. could probably be more robust, but there's really nothing other than maybe limits on the ACH side of things.
Yeah.
And so, incorporating those sort of user-driven heuristics or rules on the ACH
Yeah, I
side.
can't tell you how many times we'd see fraud from members where they're like, "Can I just turn this service off? I'm never going to use it.
Yeah.
I do not use this. I have no intention of using this. I will never use this. Just turn it off because it keeps being used for fraud."
Yeah.
And we're like, we can't. We're sorry, we can't turn it off. We can try to put some rules in place to like flag it and bring it to our attention that something's happening because you've said that you don't want to use it, but we can't.
Yeah. So flexibility with your digital applications is going to obviously be important. In consumers, I can see already going to start demanding it. One of the things I wanted to do instantly in Cash App was just turn off transactions. I don't use the card. I use it for other things. Just something I couldn't really do.
Yeah, and where the consumer gets what they want, that's where they're going to go.
Right.
Yeah. So the more flexibility you have in your application is just, it's going to increase your customer base.
Do you see
it's going to drive members to credit unions being able to offer them more flexibility and ownership of their account?
So when it comes to fraud, where are you guys seeing more of it, in the sort of card space or with ACH?
So another great question. Card fraud used to be a big problem. It's still a problem. It's just not as big as it used to be in like 2015, 2016. And that was because of the implementation of the chip. Now, the chip did not solve all problems. It just shifted the problem somewhere else. So you used to have a big population of counterfeit fraud. So with counterfeit fraud, you would buy the track 2 data from the mag stripe on the card, and you would just implant that onto a gift card, run it, get another mag stripe, run it, get another mag stripe, run it. But you can't do that anymore because of the chip. And so what it did is it started to shift the fraud from card present to card not present. So a lot of e-commerce transactions, but within the e-commerce space, you have more pushback for chargebacks. So there's limited losses because you have a higher opportunity to charge back to the merchant because of maybe some failed authentication on their end.
Got it.
Right. But what we've actually started to see, and this is more like on the dark web, is bank accounts are a lot cheaper now to buy. And so you're starting to see credentials for bank accounts be used a lot more often than just a credit card number or a debit card number. People are buying account numbers and bank accounts because it's a lot more lucrative. It's a lot easier to use. Because you can just make an ACH transaction and boom, the money's there. You're not having to swipe a card, buy a product, move that somewhere, sell it. And so you're able to just get your hands, it's a lot more liquid. And so it's a lot easier.
Why is it important for credit unions to have a compelling digital experience? And how do they balance, sort of the seamless friction experience with protecting their customers, their members' money?
We see that millennials and Gen Z are digital creatures.
Okay.
What drives them is how they can make a difference and how they can impact others, right? And that is the focus of credit unions. That's what they enjoy doing. And so I don't, from a personal experience, I don't see millennials and Gen Z actually noticing that and seeing that. They don't understand what the difference is between a credit union and a bank. Yeah. And they're not going to give credit unions the time of day if they don't have a good digital experience. Because millennials and Gen Z, they are digital creatures. They live virtually. And so if you don't have a good experience digitally, they're not going to give you anything. They're not going to give you time. They're not going to give you attention. And in order to stay in business, you're going to need them because they're taking over the market. And if you don't, it's unfortunate, but if you don't capture their attention, then you're going to go out of business.
Yeah.
And so being able to have one, the digital experience is going to draw them in. But I think what really lands the deal is when they understand that credit unions are for the community and banks are for profit.
All right, Justin, one more question and then we'll get you out of here. How can people find out more about you and what you guys are doing at Point Predictive to help banks and credit unions?
Sure. So like Project Finance, and, I love what you guys are doing where you're very focused on providing a seamless and top of the line online banking experience, right? At Point Predictive, we do something similar, but in the lending space. So we really focus on helping banks, credit unions, auto lenders, and mortgage lenders streamline their processes, identify fraud much better, and just make that onboarding and origination process very easy for the lender and very easy for their customers. So we do this typically in fraud prevention. Lenders and financial institutions fight in silos by themselves within their own four walls, where we offer our consortium. I know it's about 100 million applications at the moment, where you can leverage information from defaults as well as fraud patterns, as well as trustworthy behavior across the auto and mortgage industry to understand, is the information being passed to me on an application trustworthy and makes sense? So it allows you to, as I say, risk management is like walking a tightrope, right? You're constantly balancing your customer and member experience and your customer and member security. And what Point Predictive does is tries to widen that rope and make it a lot easier to traverse across. So you can reach me on LinkedIn. You can find us at pointpredictive.com. And yeah.
Awesome. Well, thank you, Justin. You set the bar high for the sort of kickoff of our video series. So I appreciate your time.
Yeah, thanks for having me, Colby. It's been a lot of fun.